Welcome to this 10 Minutes About by Global Risk Management. Today I have Anna in the studio with me. Welcome.
Thank you.
Today we're going to be talking about EUAs and the UA market. So first of all, the UA has been under pressure. What is going on here?
EUAs or EU emission allowances, or the price of emission, is highly correlated with gas prices. And you might ask, well, what's the correlation between the price of emission and gas prices? And in that respect, it's important to remember that the power sector is the most important sector in the EUA market. So when gas prices go up, they tend to switch those that can switch between gas and coal. They tend to switch towards coal, which has a higher content of emissions, so they have to buy more EUA allowances. But when gas prices go down, they switch back to gas, which has a lower emission content, so they have to buy less EUAs. So we end up with this correlation between gas prices and EUA. So that's an important reason. But it's of course also important to remember that the EUA is a system for Europe, and the European industrial sector has been under a lot of pressure the last 3 or 4 months. We're seeing that industrial production is going down again. These so-called PMIs that are sort of an indicator for the future, they're going down again. It doesn't look very good for the European industry. When the industry is struggling, they need fewer EUAs. So that's one part of the story, so less demand from that source. Another important factor is that in the power sector, which is the most important emitter, most important factor for this market, that the use of renewables is actually rising quite rapidly at the moment. The sun is not shining today, but it has actually been a very sunny year. There's been a lot of solar power installed. There's been more wind power installed. We're becoming better at saving energy. So the overall use of fossil fuels in power production is dropping quite rapidly. So when we use less gas, less coal, the demand for EUAs go down. So that's also a reason behind this price drop. And then I think we might be starting to see something a bit similar to what we saw a year ago, because we actually had a bit of the similar situation a year ago, that the market realized, maybe these power guys, maybe the industrial sector, they need less EUAs this year. We might actually be in a situation where they sort of what you call overhedged. Remember, if you do emission today, as a company, you have to surrender these EUAs September next year. But you buy them already today. You do your hedge, your risk management. You do that today. But if you end up in a situation seeing, okay, maybe I've been buying too many EUAs for the emission I have, you have to sell them back into the market, and it gives downward pressure on the price. So I think that's also a part of the story here.
And is that becoming a trend?
No, I don't think you could say it's a trend, because I think all companies are, of course, trying to sort of calculate what is our demand, what is our emission, how many EUAs do we have to surrender next year, and so on. So I don't think we can say that this is a kind of a normal thing that will repeat itself every year, but it seems like that it might be starting to repeat itself also this year. Okay. But it's a good background, because renewables is really picking up in power production. We've also been through a year where nuclear power in France has been doing well, hydropower in Sweden and Norway has been doing well, and so on.
And I also understand that we have a bit of a speculative activity in the UA market as well.
Yeah, that's correct. You can say, what is the market trading on from like day to day, week to week, maybe even month to month, because these emission data, for example, they come with a huge delay, so they are difficult to trade. So if you're an EUA trader, you might look at the gas price, say, okay, what's the gas price doing? And then, if the gas goes up, you should buy EUAs, and vice versa. Even though you can argue maybe this correlation shouldn't be this strong, especially in the future, because there will be less and less gas in power, in the power production. But it's still there. And then a lot of EUA traders, they look at what are the speculators doing. And we actually have quite good data of this. if we trade on if we do a forward or a future on the ICE exchange, we have to tell why did we do this future, why did we took this futures position. All banks, all everyone active in the market has to do that, and then we can look at sort of the aggregated picture of what our investment funds doing or speculators doing. And we have been seeing that they have also been selling EUA, so I think they have contributed to the lower prices seen recently. It's actually very different from what we're seeing, for example, in gas.
And I like to ask about it, the structural story here. What do we see?
Yeah, I think an important structural story is, of course, the higher use of renewables. It actually goes quite fast. So that's on the sort of demand side. But of course, there's also a structural side on the supply side. We have what you call a linear reduction factor. Every year, you take out some EUAs from the market to make sure. Otherwise, the price would collapse, because if you do less emission and you had the same amount of allowances in the market, the price would go down. So every year, you take out a roughly 4.5% of market. That is called the linear reduction factor, and that will continue for the next couple of years. So that mitigate the demand side is mitigated by lower supply. Then of course there'll be less free allowances if you're an industrial company. You are used to getting what you call free allowances, so you could compete with industrials outside the EU. That will be scaled down. We will have this so-called CBAM coming into force in a couple of years.
And CBAM, what is that about?
That it means cross-border adjustment mechanism, CBAM, and it is a system coming into place over the coming years. And it's a bit complicated, but it basically means that if you, for example, import aluminium, fertilizers from outside the EU, you will also have to pay by EU allowances. So it means that foreign companies do not have a competitive advantage selling these products in Europe. But to make that to allow that, you will have to phase out some of the free allowances in that sector. Another structural thing that's of course going on is that the maritime sector is now in the EUA system. Some of the free allowances in airlines will also be scaled out over the coming years. So there will be less supply over the coming years. And we have actually seen this year extra supply because you have borrowed, it's a bit technical, you have borrowed allowances from the futures to fund what you call the Repower EU. So if you sell those allowances today, over the coming years, that will actually reverse because you have sold something you were supposed to sell in the future.
And how do you then see the price for 2025?
At the moment, we're trading around this 65 level. I wouldn't be surprised if we short-term saw some downward pressure on prices, but I actually think that would be an excellent entry level if you are a consumer, a so-called emitter that needs to buy EUAs to cover your emission for 2025. Because as we move into 2025, I actually believe that maybe the European economy is not that weak. We're getting rate cuts, inflation is coming down. Maybe the global economy is actually doing a bit better. So maybe the industrial demand is actually going to pick up a bit next year. And then on the supply side, this linear reduction factor actually kicks in. It does that every year. So over time, we'll tend to have this upward pressure on prices. And then, as we discussed before, this correlation between gas and EUA prices, it might disappear next year, but there's certainly also probability that they will stay in place. And we all know that gas prices are highly volatile, especially over the winter. They could move higher, but they could also move higher next year as demand for gas from Asia and so on. Gas for LNG is very high. That would tend to drag EUAs higher. So I actually think there's a good probability that the price will be somewhat above the level we have today, maybe in the mid-70s or something like that. That's 10 euros higher than we have today.
Okay, Anna, thank you for a great perspective on the EUA market.
Thank you.